Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com. Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Welcome back to Stansberryinvestor.com. We are catching up with my guest today ahead of the Fed's final scheduled two-day meeting for the year, where they are expected to lay out the plan on how they will fight inflation. Well, we're going to get Gareth Soloway's thoughts on this today. He is the president of InTheMoneyStocks.com. Gareth, it's been a long time coming. Welcome to my show here at Stansberry.
Thank you so much for having me, Daniela. It's a wonderful pleasure to be here.
I'm sure all my viewers will be thrilled because I cannot tell you the amount of comments I've received. When will you have Gareth Soloway on? So thank you. Thank you for coming on. Thank you for reaching out. I'm happy to get your thoughts because you are a crypto expert. You know, you've had great calls when it comes to Bitcoin for those folks new to you at home. But like I said, we're talking here ahead of the Fed, where they're expected to be quite hawkish. As we know, they're going to start winding down the largest asset purchase program in history. So I want to get your thoughts on that and how that plays into crypto. What can we expect from them?
So it seems more and more likely that the Federal Reserve will increase their taper. So last meeting they announced, I think it was 15 billion a month that they were going to roll off of the 120 billion that they were doing in stimulus that was going into the system. So my guess is, especially after the PPI number came in so hot in the morning on Tuesday, you have to expect that the Fed is going to increase that taper even more so. And they might even talk up the potential for interest rates. One of the interesting pivot points that I've talked about recently is that when Jerome Powell was appointed to the Federal Reserve chair position by President Biden, it actually created a scenario for him to be more hawkish. And if you look at the midterms coming up for the elections in 2022, it makes perfect sense that Biden, who has a lot of voters in that middle income and lower income bracket that are getting hammered by inflation, he would say to Jerome Powell, listen, I'll reappoint you, but could you focus in on inflation, be a little bit more hawkish, get inflation under control before the midterm election? So I'm expecting a pretty hawkish Fed for the Federal Reserve decision.
And that said, we see how the cryptocurrencies are reacting thus far, not good. But what's interesting, the grander scheme of things here, Gareth, is that we don't really have a lot of data to go by in terms of how cryptocurrencies act during a tightening cycle. I mean, the last time this really happened was 2015, and Bitcoin at the time was 1/100th of its current price. So we don't know which way the cryptos will go here.
Right. And I think that's important because, in general, the tightening. So this is the way I take it, is that you had a period from 2009, which is, by the way, when Bitcoin debuted, all the way till now, where the Fed was just pumping money endlessly into the markets. I mean, quantitative easing, round 1, 2, 5, 20, whatever it may be. And now they're finally starting to pull back because for the first time, we have inflation that's really been above 2%. So you have to assume that pulling money out of the system will have an impact on cryptocurrencies, probably to the downside in the near term. The one caveat I would say is that the Fed cannot endlessly just kind of pull back on QE and raise interest rates because of the US debt. There's going to be a maximum amount that they can do. And the second a new black swan event occurs, whether it's a recession or something we don't know about, you are going to have to see the Fed come in and they're going to start printing money again. So yes, short term, I think downside on crypto makes sense. If you're looking 3 to 5 years out, Bitcoin will go higher.
Okay. So let's talk numbers now. And also to that point, because we do know that when interest rates kick in, when there's a taper, that the stock market, many are expecting a correction and in turn that would bleed over into other risk assets, such as the cryptocurrency space. So let's talk Bitcoin numbers now, because you, like I've said, you had some really good calls when it comes to Bitcoin. You have said you are long-time investor and believer in Bitcoin, but you're not always uber bullish on Bitcoin, right? You never had this call. I mean, I've had some experts calling for 220,000 by year end. I think it's pretty safe to say, of course, you never know what's going to happen, that we won't hit that target this year.
Yeah. Yeah. So, I mean, yeah. And I would just say that, there's a lot of hope and there's a lot of kind of, irrational exuberance in the crypto market, which honestly tends to mark tops. When you get people calling these crazy targets, it generally, I mean, look at the stock market calls and so forth. Historically, that has definitely labeled tops in the past. And that's the key. So if we let's go to the Bitcoin chart now and take a look. I think this is fascinating, is that here's your April high, right? And so many people got so bullish when we pierced it one day here and one day here before reversing. And then we've seen that pretty steep sell-off. And what I would say to people is, number one, when we broke it in October, that coincided with the Bitcoin ETF, the futures Bitcoin ETF. Mm-hmm. Just a little history for everyone. The last time you had something debuting, which happened to be the futures for Bitcoin, it marked the top in 2017. So kind of an interesting little parallel there with tops in the Bitcoin market. And there was so much hype then going into the futures debuting, and then same thing with the ETF that debuted. Now, one of the things that has me very concerned near term, and you're absolutely right. I'm a very technical trader. So it's all about the charts to me. That's all that matters. Nothing else matters. And what you could see over here in the chart is that we had a head and shoulders pattern right here. And there was kind of like a little M head, right? So you could connect it up here to create that head, but it was a shoulder, head, and shoulder. And then there was a neckline here. And what happened was, when you broke the neckline, that created the waterfall effect to 30,000 right there. Now, what has me concerned is that we're almost creating the same type of pattern again here, where you have a bigger shoulder here, the same M top right here. And then here could be the forming of a right shoulder. And what's scary about that as a technical trader, if you're bullish Bitcoin, is that if this breaks, if price gets below this line, which is around 42,000, the calculated downside target is below 20,000 on the charts. And again, that's something that has me very fully aware. I think investors have to be fully aware to kind of monitor that as well. If you're uber bullish, just be a little cautious. Long term, hugely bullish. Short term, there's a liquidity issue here that could be drying up, and that could force Bitcoin down.
You beat me to that question, because I had seen that you were calling for, Bitcoin possible correction back down to 20,000. I was going to ask you if that was still in the cards. So it is.
Yeah, it certainly is. And especially the more I see how hawkish the Fed is, one of the reasons why we've seen Bitcoin and the altcoins expand so much is that you've had this kind of liquidity bubble created by the Federal Reserve and to some extent the US government, right? With checks going out to Americans. A lot of Americans didn't need that money. They were home during COVID. So they put it right into the stock market or right into cryptocurrencies. And as the Fed starts to get more hawkish and yields go up on the 10-year and they start to taper, you're going to see this kind of deleveraging in the system. And that deleveraging will go through the stock market as well as cryptocurrency. So I'm still in the camp that you're going to get great bounces here and there, but ultimately you are going to go lower in cryptocurrency.
Let's play out that scenario. If we were to go and go back down to 20,000, then is there a huge rally back after that? Not necessarily.
Yeah, so I do think that just like we saw in the last cycle, so you had the cycle high in 2017, and then you kind of had this trail off where, remember, we almost got to 20,000 in 2017, and it bottomed out around 3,000, 3,500. So, I mean, it gives you an idea of how much Bitcoin could decline from 65, 68,000, and it could easily go below that 20,000, and it would just be a run-of-your-mill cycle, right? So I think that that's very important. And the other point is, we're in a 4-year cycle in Bitcoin, right? So Bitcoin debuted in 2009. Then in 2013, you had a high, which was a major kind of eruption move at that point in time. That was 4 years later. Then 2017, 4 years later, was the high at that point. And here we are in 2021, which is 4 years later. So my analysis is pointing more towards a multi-year kind of basing pullback, where we'll hover around 20,000 maybe for a year, 6 months. and then you'll start to see a
Wow,
grind back up.
that's a long time.
Eventually, yeah. I mean, this is the problem. Everyone wants that instant gratification. I understand it. I wish it was going to be quicker. But if the cycles hold true, the next time you break to the upside, it'll be about 3 years from now. And then by 4 years, you'll be making that next major high in Bitcoin, which should be well north of 100,000.
So what is Gareth Soloway doing right now with Bitcoin?
So right now with Bitcoin, I actually have a small position, which I'm looking for a small bounce. This is a very quick swing trade. I'm a swing trader by nature and a day trader. So I'm expecting us to move back to about 52 to 54,000, creating that right shoulder. And then I will be on the sidelines as it declines. My bigger positions where I'm going to put in some serious capital will be when we see 20,000 or sub 20,000. That'll be for a longer term investment in Bitcoin, and I'll hold that for multiple years.
Let me get your take on this, because proponents of Bitcoin would say, well, it's the natural DNA of Bitcoin to have this type of volatility, that if it would go down to 20,000, it's normal, and you should just come in and buy at those dips and take advantage. Now, do you buy that narrative? Is there truth there?
Yeah, I mean, there is some truth, right? But it's just, as an investor, you have to decide, are you okay being down 50, 60, 70%
Right,
on your investment,
right.
before it starts to move up? I've always been someone who, it bugs me. I get annoyed when I buy too high and it goes down and I'm down on a position. But again, if you're someone who's saying, hey, listen, I'm 30 years old and I'm holding till I'm 60 years old, then in the scheme of things, this may not be a big deal. But think about the return you can generate if versus paying 60,000, pay 20,000. The percentage return increase that you'll make when it goes to 500,000 is a huge amount better.
This is a big decision for those who have Bitcoin at home. If the 20,000 plays out, do you get out now?
Yeah.
And then get back in? I mean, I know you can't give investment advice, but
Yeah.
that's
I mean,
a scary scenario.
it's such a hard thing to say because, again, there's always a chance that I'm wrong. I've been wrong many times in my career investing. The great thing I always remind myself of is that there's always another trade at some point, whether you trade stocks or cryptocurrencies, there's always another trade coming around the corner. So if you miss one, it's not the end of the world. But again, I think each person has to look at their time horizon. I think you also have to analyze what the Fed is doing here and all these other factors. One of the best things for me, which will make me believe in Bitcoin even more, is believe it or not, when we get some regulation in the system, right? So right now you have kind of the Wild West, where whales can influence price so much. You can create this massive move. Like even a couple Fridays into Saturdays ago, we saw that drop from 54,000 to 42,000 in such a quick amount of time. That's not healthy. That doesn't get pension funds and hedge funds in trades or in investments in cryptocurrency when they see those type of volatile moves. So you want to see some regulation. It'll make, the bigger players feel more comfortable. The more big players get in the system, the more stable Bitcoin becomes.
Really, really good thoughts there. Since it's our first time speaking, Gareth, interested to get your ideas around gold and other commodities via Bitcoin.
Yeah.
You like gold?
I love gold, right?
Wow.
So I'm a big fan of gold right now.
Okay.
Believe it or not, and I'm going to bring up a chart for you guys right here, but I believe gold will actually be the best performing asset in 2022, beating the stock market and beating Bitcoin.
Oh my
So
God.
I know that sounds, that's probably earth-shattering news.
Oh, I'm just picturing Frank Justra watching this saying, yes.
So again,
finally, someone's listening to me.
Yeah. So first of all, check out this channel that you created. Now, a lot of people, especially Bitcoiners, they're going to say, well, gold hasn't done anything. Everyone's getting into Bitcoin. Honestly, this is exactly what you want to see from gold. So number one, the big move up from 2019 to 2020, that was a huge move. This is what's called digestion or a bull flag of consolidation. So that's actually a bullish pattern forming on the gold chart. The next thing you have to keep in mind is once you break this line, which is around 1865, you should shoot all the way back to close to 2100. And I think by the end of 2022, you're looking at a potential $3,000 price target on gold. And the last thing I'll say is if you compare the mid 70s to the mid 85 range, which is a hugely inflationary period and probably the closest to what we're experiencing now, gold for the first few years of those high inflation periods did very little. And it was later in the cycle, kind of in the late 70s, where gold just started to rip higher. And it almost seems like we're repeating that in the charts right now.
Okay. So two thoughts here. Two thoughts. I was not expecting you to say that, by the way. So I'm blown away by that. I'm about to recompose myself here a second.
Yeah,
Okay.
sorry to shock. Sorry to shock.
First shattering stuff. Okay. So then do you think that the inflation story is not temporary and here to stay, a bigger problem, and that's what will drive up gold? And do you see the dollar, look at the dollar strength now. Where's the US dollar if gold's going to reach 3,000?
Yeah. So this is the problem with, the situation with inflation. So, you've seen oil, you've seen natural gas come back in, which is part of the battle. The bigger battle for inflation that's going to keep inflation high for a long period of time is the wage increases that are going through. So, if you're Apple, or if you're even just a convenience store and you've had to raise your minimum wage from $10 to $20 to get an employee in the door, you can't all of a sudden just double the prices of things on the shelves, right? I mean, you can't pass that inflation through. And remember, wage inflation is the biggest component of inflation, right? I mean, that's the biggest expense that a business has. So when you're having to raise these, what's going to happen is these businesses are going to push through the inflation or raise prices for multiple years until they kind of compensate for the jump in wages here. And that's going to make inflation last for many, many years. I don't necessarily think it's going to be 10% for many years, but I certainly think 5 to 7% is a likely multiple year inflation rate going forward. And it's not a fun thing for smaller, lower income and middle incomers. It's going to be hard for them.
All right. I hear the silver folks yelling in my ear if I don't ask you this. Silver.
All right.
Silver.
So
Yes.
silver.
Yes.
Let's take a look at that.
Getting there, people. Silver.
Yes. Always good to go over silver. So the silver chart is actually very bullish as well. Right now, it's holding on to this support right here, which is right around $22 per ounce. I do think there's a small chance it could dip. It's trying to break down. It's hit this line many, many times over. And if it breaks down, then you're going to see a move down here to this level here at around 19. Now, ultimately, this is still bullish consolidation. Even if it dips here, I will be a big buyer. You can see the reason I have that technical level. This is a former pivot, and former pivot. So there's a lot of supports right around here. But the key reason for understanding silver and why it could be a little bit of an issue versus gold being a pure play for inflation is that it's an industrial metal as well. So if we start seeing that slowdown in the economy because rates are going up, because the Fed is pulling money out of the system, because the stock market's declining, people don't think that they're super wealthy anymore because their portfolios have gone down 10 or 15 or 20%, that could impact in the near term silver. But the long-term basis is that the Fed is going to come back to the rescue. As soon as unemployment starts to spike back up, they're going to come back in with more monetary easing. And just the fact that the debt in the US is so high, they can't let interest rates go that high anyways.
Bringing it back to the cryptos here. Okay, so you like gold, silver, not as much, but you like silver.
Yeah.
In terms of the crypto space, outside of Bitcoin, what does Gareth like?
So, overall, this is where it gets tricky, right? So as a swing trader, I like Cardano. It's getting into some levels that make sense to me. So if you look at the chart here on Cardano here, and let me erase my former lines, you have some very significant support coming up just above $1. And there's even some, you could make a case that this was above $3 here, and it's now hovering at $1.24. So there is an oversold condition that should get it to bounce. So I like that. I think Polkadot for a near-term trade. But I do want to be clear here, folks, is that you have to be very, very cautious on the altcoins. So this is one of the key points. If you look at the Amazon chart, and this is getting a little bit more weird, but it's very important. The Amazon chart in 2000 looks exactly like the Bitcoin chart does now. And from 2000, we had Amazon trading around $80 a share. It went down to $5 before it obviously went to 3,000 and change where it is now. My fear is that if we're repeating the .coms, that you're going to see a lot of the altcoins go to zero, just like a lot of the .coms got wiped out. Now, the strong will survive. So the Bitcoins, the Ethers, maybe Solana, maybe Cardano, some of these, but just be ready for that type of flush out. You can't have meme coins. I mean, the fact that a joke coin like Dogecoin or Shiba Inu can be a $60 billion asset is kind of scary, honestly, for those of us that have been in this market for a long time.
Right. But then you got guys like Elon Musk coming out saying, guess what? You want to buy a Tesla? You could do so now with Dogecoin.
Yeah.
Endangered the service there, in your opinion?
Yeah. I mean, he's trying to create, I feel like, I wonder if he's feeling a little guilty for pumping it early on when it was a lot higher. And now he's trying to throw a bone to the investors of Dogecoin to try to push it up so they can get out. Yeah, it's such a tricky scenario with him. You just never know for sure. But I guess my point is just be careful. If you want to read up on the .coms for viewers out there who are younger, that was my beginning period of trading, and I learned many hard lessons. I made a lot of money, and then I learned a lot of hard lessons.
Yeah, no, that's good. Good thoughts there, Gareth. I guess finally, another big news item that kind of went under the radar, but Bank of England coming out warning folks to avoid Bitcoin. Now, I think this is an interesting news item because here we have the Bank of England, feeling or, compelled to come out with a statement regarding Bitcoin. Is that out of fear or true concern?
Yeah. So, I mean, I think there's probably part of both, right? So I think central banks are getting a little nervous about, cryptocurrencies, which don't have any, the central banks can't technically control those. So I think there's partially fear, but I also think, just looking at what's gone on, and remember, these central banks are aware that inflation is becoming an issue and they're going to have to tighten. Right. So they could be saying, hey, listen, guys, we're going to tighten. That's going to make money less easy to get or less easy to borrow, which inevitably is going to force asset prices down. Bitcoin has a history of 80% drops in every cycle. Be ready for something like that. So maybe hopefully there's an altruistic kind of view to it too from the central bank.
All right, Gareth Soloway. Merry Christmas, folks.
Thank you.
That was a great conversation. I hope everyone's happy at home and enjoyed that. Any final thoughts for our viewers watching at home, Gareth? Bring it home.
Yeah, overall, it's just such a pleasure to be here. And again, thank you, Daniela, for having me. And again, just be ready for volatility. As soon as the Fed has been the cushion for this market to keep it floating for so long. If they're going to really start drawing back on that, be ready for volatility. If you're a swing trader or a day trader, it's going to be amazing. If you're a longer term investor, you just may give back some of your gains, but stay the course and invest in smart things that make sense.
Be ready, be ready, be ready. Gareth Soloway, thank you so much for joining us here on Stansberry Investor.
Thank you.
And thank you all for watching. We will have much more incredible content like Gareth coming your way, so be sure to stay tuned. In the meantime, don't forget to sign up for premier content you can't get anywhere else at danielacambone.com. That's it for me. Thanks for watching. See you soon.